Hello and good morning, Kentucky Realtors. Again, for those that may not know me, I'm Lester Sanders, the 2020 president for Kentucky Realtors. And always honored to serve and to be with you. Thank you for this virtual legislative Hill visit. We did miss and have missed and continue to miss being in DC ourselves. But I want to thank our CEO, Steve Stevens, who's on the call, and Richard Wilson, our Government Affairs Director, for making sure that we could continue to hear from our legislators. And as I said before, these meetings keep us informed on what's really happening on the Capitol Hill as well as the country. And as we continue to advocate for ourselves as realtors and our clients, we need to continue to hear from those that are making those decisions. And our Government Affairs Director, Richard Wilson, I think we have some additional guests on as well. And will you introduce those people for us, please?
So also joining us on the call this morning is HDevlin, who is the Director of Federal Legislative and Political Affairs with NAR. Helen, thanks for joining us this morning, taking time out of your busy day as well.
Thank you, glad to be here.
Also on the call is Dan Taylor, who is a staff member of Congressman Barr. He is a policy advisor. Dan, thank you for joining us as well.
Thank you, Richard. Is there anyone else? If not, I'll continue on. One of the most essential links, as I've said before, in our line of communication, our people on the ground are the people that have that personal relationship with our congressman, and we call them our federal political coordinators. Again, it's our voice to the congressman. And in doing this introduction, I would like to just simply introduce Todd Hyatt, who's our Congressman Barr's FPC federal political coordinator. He works in the family business with his wife, Lois, and Desmond in real estate there in Lawrenceburg. He's been a KYR delegate. He's an LBAR director, and Todd is a President Circle RPAC member. So with that, I will turn it over to you, Todd, to do your introduction of Congressman Barr. Thank you.
All right, thanks, Lester. It's pretty easy being Congressman Barr's FPC. We've known Andy, our family's known Andy for years. Andy is an individual that, as all of you all know that are on this call, he's always open to hear what our initiatives are, what our concerns are, and he and his staff are always available, which is great. Lester reminded me, as those of you know, Andy is in a race, and for those of us that are part of the President Circle, we can donate, and Andy is on the list. So if you would, I'm sure he would appreciate any amount of money that you could give for him. He is our friend for sure, and I'm sure he's got a lot of things to tell us about today. So Andy, I'll turn it over to you.
Thank you, Todd. I appreciate the kind words. And Lester, thank you for your leadership with the Kentucky Realtors. Appreciate having you on the call. Richard and Steve, thank you all for always being there and answering questions for our staff. I have to say hello to my good friend HDevlin in Washington, D.C. I assume you're doing well. You're looking good, and I appreciate working with NAR. And Helen does a great job. For those of you who don't know her well enough, she's a native Kentuckian, so we're lucky to have her at the National Association of Realtors. And then locally, I see Justin Landon on the line for LBAR. Good to see you. So it's great to be with all of you all, and I very much appreciate the opportunity to visit with you all via teleconference or video conference, which I know we're all doing more and more of these days given the circumstances. I want to also just thank my staff, Dan Taylor, for being on the line. For those of you who don't know, he staffs me on all of our work related to housing, real estate, financial services, and he's a great resource for all of you. As Todd said, we do very much appreciate our relationship with the realtors. So we depend and rely on your expertise in housing, which is of course a massive a massive sector of our economy and is going to be really crucial in leading our recovery from the pandemic. So please, please, he is very accessible. Call him with your suggestions, call me, but he's a great resource for you. Before I start, I'm just remiss if I wouldn't say something about what's going on in our country right now. I know this is a time of frustration and difficulty in our country right now, and we need healing and we need unity during these difficult times. And so our thoughts and prayers are with all of the folks out there and in support of the George Floyd's family and also the peaceful protesters out there. We want to make sure that everybody is safe. And I'm very proud, for those of you who kind of observed our district, our law enforcement has been very good, and I think we've avoided some of the violence that you've seen across the country, but clearly our country needs a lot of unity right now, and hoping that we can get there. In terms of the response to the pandemic, we're seeing the economy start to reopen, which I think is very important. I think during the economic shutdown, to respond to the public health crisis, there was a very aggressive response from the federal government. You saw the Federal Reserve act very swiftly, not just in terms of the low interest rates, which I hope has helped prop up your industry somewhat during these difficult times, but also just the bond buying, the quantitative easing. I know mortgage-backed securities were part of the purchase program, but I think more to the point, some of the emergency lending facilities that the Fed stood up very aggressively and very swiftly to provide support to the economy, key portions of the economy. We've got the securities, securitization, asset-backed securities facility, the TALF. You have the corporate credit facilities. You have the money market mutual fund facilities, the Treasury facility, and then the Main Street program, we are told, is just now activated and ready to go from the Fed. And then, of course, from Congress and the CARES Act, the PPP program and the EIDL, Small Business Administration Economic Injury Disaster Loan Program. EIDL didn't work very well early because there wasn't appropriations. And then in the fourth and final bill, there was a $50 billion appropriation and a $10 billion appropriation for the grants. I think that helped a little bit. But I think the flagship program in response to the crisis was the Paycheck Protection Program, which had 2 tranches, and there was a reform to that program that passed the House and the Senate last week and this week, which will make the program, I think, I know it's frustrating that the program keeps changing. That's a problem. But I do think that the changes overall will help many of the businesses weather the storm and create more forgiveness opportunity for those businesses to keep workers on the payroll. So there was a modification, for those of you who didn't follow this, of the time period in which the proceeds of the loan could be used from 8 weeks all the way out to 24 weeks. And then the ratio of the proceeds of the loan that can be used for payroll versus non-payroll moved from 75-25 to 60-40, meaning that now the program can be used, 40% of the loan can be used for non-payroll. But the program, I think, worked by and large the way it was intended, and that was to keep people on the payroll and off of unemployment. Of course, we had a massive surge in unemployment, and Congress did respond with $260 billion in the CARES Act for enhanced unemployment. But the PPP program, $510 billion of that has been used out of $610 billion. 64% of that came from lending institutions with less than $10 billion in assets. So the community banks and credit unions, the smaller and regional lenders, community-based lenders, they really led the way on this. 14 years of lending from the SBA was pushed out in just the first 14 days of the program, and millions of jobs were saved. And we kept a lot of employees connected to their employers even while the economy was shut down. And that was crucial in terms of keeping mortgages on track, keeping people in their houses, keeping people on the payroll so that they can still be in the housing market, frankly. And now that the economy is opening back up, what we think is good about the PPP program is that those employees are still connected to their employers, and they will help restart the economy very, very quickly. And that is important for the recovery. And we think also that the cost of the forgiveness feature is worth it because it allows these businesses, it was a lifeline for many of these businesses. It was a bridge, and it kept them in business. And the cost of allowing these small mom and pops to go under, the cost of small businesses filing for bankruptcy or going out of business, I think would have been far greater than the costs that we deployed. And by the way, not a dime of taxpayer money has yet been spent on this program. That's something that a lot of Americans don't really appreciate. The $510 billion that's been deployed has all been private capital. It's been from well-capitalized banks and credit unions that have pushed out this emergency cash flow. The forgiveness yet has not happened. And so that's when the taxpayer money will be deployed to reimburse the private sector and the lenders out there that have really been heroic in responding to these this emergency for these small businesses at this time. The one thing that we're still working on with the PPP program, and I'm leading this, we led 2 letters, one to Mnuchin, to the Treasury Secretary, and another one we are leading to the Senate, and both of these letters are out the door. We had over 50 members of Congress on both sides of the aisle sign these letters to streamline the forgiveness application. We think that's really, really important. If some of you are small business realty companies and you're beneficiaries of the PPP loan program, you know that the forgiveness application is far too bureaucratic and complicated right now. It's 11 pages, and we have politely but strongly suggested to Treasury and the SBA, we need a safe harbor, a de minimis safe harbor for smaller level loans. We've suggested all loans under $350,000 should be a simple 1 or 2 page forgiveness application instead of 11 pages and voluminous documentation. The application for the original loan was much smaller and more streamlined, and we think that's really important going forward to expedite the forgiveness process and give not just lenders a little bit of a break from the red tape, but especially the small business owners out there to be able to get their forgiveness. So I think if we get that from an administrative standpoint, which we've asked for, and we get, and with the changes that we made to extend the time period for the forgiveness and the ratio, the restrictions on the ratio of payroll to non-payroll, I think, again, this program is really becoming a lifeline for many small businesses and helping us get to the other side. That's important for the economy. That's important for the recovery. And that's going to be important to sustain the housing market as well. A couple of notes on the housing market particularly, and some of the emergency measures we took in the first 4 bills that we passed. HFA, and some of this is administrative and not related to the legislative rescue, but HFA, the regulator of Fannie and Freddie, I think they did some very important things in enabling some forbearance to keep people in their homes. They allowed Fannie and Freddie back mortgages to provide that forbearance for up to a number of months. And also, we were told by Mark Calabria, the director of HFA, that the servicers were doing okay, that they had sufficient capital through for about 4 months of forbearance, and then Fannie and Freddie were going to take over if necessary. The other thing we did on the private banking side was we passed in the CARES Act a change to the TDR rule and CECL rules. So there's a classification called troubled debt restructuring, and we directed the financial regulators to allow banks, lenders, credit unions to provide loan modifications to mortgages and not classify those as troubled debt restructurings, which the regulators and bank examiners look upon unfavorably, to allow for some of that forbearance and loan modification, again, to keep people in their homes during this economic shutdown. I think that's worked fairly well, but I want your feedback on that, the extent to which lenders are allowed to provide that forbearance and those loan modifications. And also, we suspended the current expected credit loss, or CECL, rule that was going to be, if put into place, going to be an impediment for these lenders to deploy capital during this downturn. And so we think that that has worked pretty well. And the suspension of TDR and CECL is for the pendency of the emergency up to December 31st of this year, whichever comes first. And so we think that regulatory relief has been very important in sustaining the housing market, the mortgage market, and keeping people in their homes. And then I'll stop right there, but I do want to just solicit your feedback on where we are with the housing market. I know refis are up. I don't know where new purchases are. I know we still have an inventory challenge, and that may be keeping home prices up even during this downturn. But I'd love to hear your thoughts on the economy and the recovery of the housing market, and any suggestions that you all might have. There may be another fifth bill or sixth bill, however you're counting them. And that could be, we could provide some tweaks if needed. So we want your suggestions on those. And I'm not sure what will be in that bill, but I know there's some discussions over liability reform and some discussions related to additional assistance to state and local governments. I think one thing we have to do in the coming months is commercial real estate. Foreclosures are coming, especially in CMBS-backed hospitality and retail. And that is an area of significant distress that I think we do need to address in the coming months, because the recovery in that sector is going to be much longer than a few months. It's going to be a couple of years, a year or two, I think, before we see hotels filling up and before we see retail get back to where it was before the crisis. So thanks a lot for letting me drone on there, and love to take your comments and feedback and questions.
I have a couple questions, but first of all, Congressman Barr, just thank you for your work on the PPP loan forgiveness, and just want you to know that Kentucky Realtors also sent a similar letter to the SBA and to the Treasury as well. So thank you always for the work that you do. And you mentioned the recovery, and you mentioned commercial real estate as well as the different packages that may have been passed. Is there anything in particular that you want to see in the future relief legislation that comes out?
Yes, if we cannot persuade Treasury and the Fed to stand up a separate, different lending facility for commercial real estate property owners, I think Congress will need to act and create a program for them. The PPP loan program does not help hotel owners because occupancy rates are still very, very low, because their personnel and payroll costs are really just a very small portion of what their issue is. And PPP may help them temporarily, but because occupancy rates are going to be low for a very extended, prolonged period of time, their debt service obligations, and let's face it, a lot of these properties are highly levered, they're going to need an additional lifeline of support. Further complicating that is that many of these commercial properties are backed by CMBS. There's not conventional bank loans, whole bank loans. And so the forbearance that banks may be able to provide to residential mortgage holders or to other small businesses, they can't when the CMBS servicing agreement prohibits additional indebtedness and does not permit forbearance. And so if we do not act with a new separate liquidity or lending facility unique to commercial mortgage-backed securities, then you're going to start to see foreclosures, and I think a wave of foreclosures in the late summer and the fall. And I think that would really hurt the recovery because it would result in real property waste. It would result in a life's work for many entrepreneurs and small business owners to go down the drain. It would result in bankruptcies. It would mean that the recovery would be slower because I don't think these properties and the ecosystems that are the economic ecosystems that are supported by these hotels, I don't think they will come back as quickly. And think about, you know, resort communities and resort towns and, attractions that are dependent on hotels. That'll result in a long-term problem for the economy. And so if we can keep them in business for the next year, while leisure travel and business travel takes a little bit of time to come back, I think they can help lead the jobs recovery on the back end.
Thank you. We've mentioned this one issue to a few other members of the Kentucky delegation. And so you may be aware of it by now, but many of our local associations are structured as 501c6 organizations, and these type of legal entities were left out of the latest recovery package. Do you know if there's been any discussion regarding adding these entities into upcoming legislation?
Yes, there has, and I am very supportive of including 501c6s. We were successful in getting 501c12s, the rural electric cooperatives included, but we know we still have work to do with the sixes, the chambers of commerce, organizations like yours, and also the travel, quasi-governmental travel organizations that have taken a major hit. Visit Lex is a good example of that, and we're trying to help them and include them in a modification to PPP. We tried to get it included in this bill that was the reform bill, but there was no opportunity for any amendments, and it was a very closed process. It was a take it or leave it kind of bill, and so we were not able to include 501c6s in that last reform. Even though we talked to the authors of the bill, they were not allowing any changes to the bill. So that was unfortunate. So we definitely want to include that in the next round, and there's space to do it because we've only deployed $510 billion out of the $660 billion in the PPP loan program. Plus, some of that PPP loan money is going to come back. It's going to come back in terms of businesses that give back unused money, and in terms of money that they don't want to incur additional debt that's not forgiven. So the unforgiven portion they're going to give back. So there's going to be space, I think, to help 501c6s if we just have the ability to put it in a bill. One thing I didn't mention about another bill, in addition to commercial real estate and 501c6s, I think we also need liability reform. I think that's very, very important to help keep the economy on track in recovery and to reopen the economy. I think a lot of businesses are a little gun shy right now. They don't want to get sued by either a customer or a employee who contracts the illness, but nobody can really tell definitively where they got the illness. And I think there needs to be some level of protection given to businesses that follow basic federal standards and guidelines, social distancing, masking, what have you. If they do that, they should be protected from frivolous lawsuits. That will help reopen the economy as well.
Thank you. As a member of the House Committee on Financial Services, what's it like serving on that committee, especially in these turbulent times? And what other subset questions to that? As a ranking member on the Subcommittee on Oversight and Investigations, what's the committee currently working on?
Well, overall, it's I regret that Congress is not back in Washington more on a more regular schedule. I think many of my colleagues want to, even though we all know we need to continue to social distance and wear masks and take precautions to prevent the spread and prevent recovery on the healthcare front, we feel like there's so many Americans who are essential workers. They're working, and it's not, I don't like the fact that we've got sanitation workers and grocery store workers and realtors and bank tellers and credit union workers and county clerks' offices. All these people are essential workers. They're working, I think Congress, the American people should expect Congress to be working as well. Of course, doing it safely, taking all the precautions, but we need to be back in Washington. I don't like the fact that the House, for the first time in 231 years, passed this proxy voting rule, because I think it's unconstitutional. I think anything we do with a proxy voting method is going to be ultimately struck down, and I think that'll impede the work that we're doing in Congress. We are doing a lot of work by video conference, WebEx, Zoom, and that's good that we're doing that at least. But I think we need to get back to work because there's a lot of work to be done. And as you said, oversight, there's a lot of oversight that needs to happen. There's bipartisan work that's getting done. Most of these bills have been bipartisan. I'm happy to say there was a HEROES Act, which was very partisan, that didn't pass. But a lot of these bills are bipartisan. We're having discussions in a bipartisan way on the commercial real estate problem. And we've been, and on the loan forgiveness, the PPP loan forgiveness, that was a bipartisan letter that we led. So that's good. On oversight, we do have a lot of oversight to do because there's so much taxpayer money at risk here and at stake, and we need to provide the taxpayers with those protections and oversight reviews. We had a oversight hearing. Well, it was a financial institution subcommittee, consumer protection, about how do we get these loans to lower income, low wealth communities and communities of color and minority communities, and participation by community development financial institutions and also minority depository institutions. I think that was a good hearing, and there's a lot of common ground on that. Making sure that those distressed communities get access to capital, that's very, very important right now. So that's all going very, very well.
Thank you. Now, we've seen a lot of discussion regarding opening the economy back up, and we're seeing it happen right now. A lot of places are opening up more and more. Do you have any particular areas of concern or what other things do you think we need to address, particularly here in Kentucky?
I'll be brief in answering that question. I think I've already answered it. I see the big problem going forward as commercial mortgage-backed securities and commercial real estate, retail, hospitality, hotels. That's going to take longer than other businesses. Restaurants are going to take longer. They're going to be at partial capacity. So extending the PPP for 24 weeks is really important to the restaurant businesses. Giving them more flexibility, I think, is very important. They may need another round of help. And then, again, liability reform, I think, is really important to keep the economy open. Now, on the health side, I'm not sure we can control that. We hope that when in the fall, if we have another virus that comes back, we're going to have to deal with that. But I think we've exhausted the shutdown concept. I mean, I don't think we can afford another shutdown. We've got to, I think we've built up the resiliency of the healthcare system now. We've got more testing. We've got the PPE. We've got the supply chains in much better shape. The testing is getting better. We've got vaccines in development. Johnson & Johnson and Pfizer say that they're looking to a vaccine maybe as early as October. So, I mean, I just don't think we can afford another full-scale economic shutdown. And there's no amount of PPP loans or forbearance or Main Street lending or fixes to commercial real estate that can fix a shutdown economy. We've got to keep the economy open as much as possible.
Congressman Barr, what do you see as the long-term effects of this pandemic? I know you've touched on it. Is there anything else you'd like to add to that point?
Well, I don't know if this is specific to real estate, but I think the long-term impact, I think there's some good. There's a lot of good that came out of this very bad situation. One is that we recognized that telemedicine is a tool that can be used to more efficiently and cost-effectively deliver healthcare. I think that is here to stay, and I think there's a lot of innovation in the healthcare space, like telehealth, like pharmaceuticals, like the personal protective equipment, that's made our health system more resilient. And you're going to see a renewed focus on relocating supply chains back to the United States so that we're not overly dependent on foreign sources of personal protective equipment and critical pharmaceuticals and pharmaceutical ingredients. I think that's a positive outcome and long-term positive that will come out of this crisis. I think also the American people have awoken to the reality that China is a malign actor, that they are an adversary to the United States. And as a member of the newly appointed China Task Force, we are preparing a major report and investigation, not only into the origins and the cover-up of the virus itself, but we're looking to make recommendations to prepare the United States for a long-term, multi-decade competition, strategic competition with the People's Republic of China. And again, that may not directly impact the real estate market, but it's something that I think this country is getting prepared for, and it's a very serious issue.
Thank you, Congressman. This specifically came from LBAR, and they just simply wanted to thank you for coming to a webinar with our members in the early days of COVID-19. It was our most widely attended event throughout this entire pandemic. And Tatum Dell on the staff was a great resource to us before anyone really understood and knew what was happening with the PPP and the EIDL and the pandemic overall. So thank you so very much. And that's particularly from LBAR, but all of us at KYR.
Well, thank you. We were happy to do it. And thanks to Tatum for setting that up. And we appreciate the feedback.
And Helen, did you have a question that you wanted to present to the Congressman?
Well, I just wanted to, thank you for, all the work that you all are doing. Everything that for streamlining the forbearance application sounds like something that, we would very much be interested in. I'm going to follow up with Dan to get a copy of that letter and make sure our folks know that you've been on the forefront of that. A smaller issue, but it's still an issue. And I want to thank you having to do with remote notary. That's still a glitch in the process that we're hoping we can get some legislation passed. Thank you. You just co-sponsored that bill just in the last week at our request. So we really appreciate that. I think we're up to over about 40 members on it. Hopefully maybe in this next Senate package, we can add something. Like you said, this was a take it or leave it. There was no chance to add anything on the House side when the last package went through, but thank you. And we also very much supported the latest changes to the Paycheck Protection Act that you mentioned. That bill, I think, just got signed into law this morning or is getting signed into law today. And NAR will be sending some information out, but the changes there are something that make a lot of sense to give people more flexibility on how they're using this so they can pay their rent and that kind of thing. So just thanks and let us know how we can be helpful to you.
Can I just ask your realtors on the line, what are you seeing in Kentucky, in our market? What are you seeing in terms of home sales, in terms of interest on the part of people I know there's a lot of interest in refis because of the lower interest rates, but what about home buying? I know inventory continues to be a challenge and it challenges affordability too. So what's your feedback for me on that?
Congressman, let me start with that, and I want Justin to talk about the market here. Statewide, we collect the data for the whole state, and the April numbers showed that the sales figures were down about 12.5%. And we've been maintaining a fairly decent rate throughout the spring. In fact, the first quarter we were on pace for a record year again in Kentucky until this hit. Literally the numbers that we posted for January, February, March were awesome. But now, it caught up with us in April, and we think May will probably show the same or more. But, when we listen to realtors across the state, they're still selling. We have pockets that are doing quite well. We have others that are not so much. But Justin can speak directly to the congressional district, so I'd let him do that.
Yeah, thanks, Steve. And Thanks for the question, Congressman. You know, we've been tracking data very closely ever since this began. We're tracking week by week to see what's happening. And as Steve said, you know, January and February were record months. March was not quite a record month, but it was still very good and above last year. Things kind of fell off the map in April. We were down about 24% in terms of closed volume in April, and we expect May to be similar, or somewhere between 20 and 25%. I know May's over, but realtors can be a little delayed on reporting sales on time. So, you know, we expect to have some more trickling in this week. We're expecting to be about 20% down in May, but pending transactions week by week, beginning April 1st, have been above last year consistently. And in fact, as high as 30% higher than last year in pending transactions in the month of May. So we expect June to be very strong. Listing inventory has begun to expand a little bit after Memorial Day. My hope is that Memorial Day was the big blinking light that told everybody it was okay to list their house for sale. And actually Fayette County was up 13% in new listings year over year the week after Memorial Day. So hopefully that continues because we need it. But right now, in terms of total inventory, we have fewer homes for sale in the Lexington and surrounding areas than we have ever had in the history of our MLS, at about 2,900 total homes for sale. And so hopefully that turns around. I'm a little concerned that the pandemic is going to give some bad housing decisions over the last 40 years a bit of a free pass. And I think we need to be aware that our inventory shortages are not simply the result of COVID-19, that the inventory shortages, we were already at the lowest inventory in history in January. So COVID-19 has just made those things worse, and we've got some challenges ahead of us. But our members are working, and we expect to close more properties, or at least more volume in 2020 than we did in 2019.
And home prices continue to rise, of course.
Tremendously
So,
continue to rise. Up as much as 15%.
No one's dropping their price. You know, they're just going to wait until the time is right, and then they're going to sell them. And so, you know, we keep seeing them creeping up, and every month that we report the stats, you know, we have several percent increase.
And Congressman Barr, what you're hearing from Justin and Steve, when we talk and we take a temperature every week of realtors across the state, and I'm going to tell you, it pretty much mirrors in all the different markets what's been said, that we knew that this was coming, where we were going to have low inventory. Why? Because we already had low inventory to start with. But at the same time, what we're seeing is brisk people being busy. Realtors in a lot of places across the state are very busy right now. We're starting to see a lot more contracts come in. So all the support that you worked on really helped us get through that tough time. And I think people are now, they know they're out there, that there's opportunity there, and realtors are working. And we appreciate, again, the support that you've given us. Are there any other questions? We don't want to keep the Congressman all day. Not that we, but we would if we could.
Oh, I see Carl Tackett on there. I just want to see, Carl, how are things in Scott County?
And it's good to see you. Always good to see you.
Good to see you. And
of course, I sent you a message there asking how Carol and the family are doing during all these crazy times.
They're doing well. Thanks for asking.
But yeah, Scott County, I mean, it's still moving pretty good. I mean, obviously we experienced a little slowdown, but it seems to be picking back up, which is good. I think we're seeing some issues with some lending issues right now, maybe even appraisal issues by the appraisers not being able to go into houses. So I think that's a little bit of a concern for all of us in the real estate industry. But again, always good to see you.
Good to see you too. I do see where we do see home building, not in Lexington, but we see it in Scott County and Madison County. I've seen a lot of home building down there too.
Congressman, we have one other question from one of our members. Is there anything in the works to help small investors who have been unable to get those not paying rent and evict these tenants? The loss of income to small investors will push them into foreclosure, somewhere on the edge, and this may do it. They need income to survive as well.
Yes, so great question. First of all, I think ending the shutdown is really important because you got to get people back to work and you got to get people paying their rent. That is the number one thing we can do on that front. And the forbearances that have been put into place need to stay temporary. And that's why I think it's really important that we, as the economy is opening up, not extend that PUA, that unemployment insurance past July 31st, which is a proposal on the table. I think that's actually frustrated PPP, and it's prevented people from going back to work, and it's prevented people from paying their rents. So I would just say we got to get people back to work paying their rents as much as possible so that those investors don't go under and those property owners don't go under. Beyond that, the investors, if they have small businesses, they could be eligible for some of those lending programs, either PPP or the Main Street lending program, which is now online, and that gives them a super low interest rate for up to 5 years with a forbearance on that up to a year. And if there are any questions about those programs, they can call Dan in my office and we can get them that information. But ultimately, we can't forbear forever. And that's why we're hopeful that we can get the economy going again. I don't know, does that answer your question, or am I missing the mark on that?
I think you're in the right place. Ken Warden, that was his question, and he's asked that to us on several different occasions. So Ken, if you're able to speak, I'm not sure if he is or not. Did that answer your question? I'm going to assume that it did address it, and then so we'll move on. Again, yes.
Can you hear me now?
Yes.
Okay. Congressman, thank you. We have a lot of small investors. By that, I mean they may have a 2-family, 3-family, 5-family. Have 3 or 4 of these, and they're all leveraged together. And when you get the tenants in there that are not paying, and now the Kentucky Supreme Court has said there'll be no evictions at least till July. Will they open up the court to even hear them? That was the order that came down the other day. So you've got those that will have been in there for 6 months and paid no rent. A lot of those, the utilities are in the landlord's name. So he's still having to pay those. The law doesn't allow him to turn those off, during this time period. Those people are kind of the lifeline of small investors. They just need to get some kind of help. I had a tenant. Luckily, my tenant decided that he was going to go ahead and leave, but I lost 5 months rent on him.
Yeah. I really would recommend landlords taking a look at the Main Street lending program, going to your banks and looking at those. And the reason is that a lot of people think that program is just for larger or mid-sized employers over 500 employees. It's not. It would allow you to look at even a small business to take a look at that program. Now, I know nobody wants to take on additional debt, but it is a program where you wouldn't have to pay on that new line of credit for a year, and you would have the interest rate on that loan could be as low as 200 basis points, maybe pretty low interest rate. And as your tenants come back online and as they start repaying, that should and catching up, that should help you service that additional line of credit. So you would have to structure that with your local lender, but I would investigate that, and don't hesitate to have those folks, those businesses, investors reach out to Dan Taylor to take a look at it. And Dan, you're still on the line. Do you have any other suggestions on that? Yeah, Dan still is not, that's not working.
Must have been a rough night.
Yeah, you still got a bad connection there, but I think that's one thing to look at. And then at some point, we've got to recognize that, landlords have payments to make as well, and we can't have a cascading effect. So while there's been there's been a lot of forbearance, and that's been appropriate for a temporary period of time, it can't go on forever, and there's got to be a cutoff and a reopening of the legal system at some point in time. And I would say, by the end of, by the end of July, the economy should be revved up and back to, and people, there are plenty of jobs available right now. People need to get back to work and pay their rent.
Thank you. I appreciate your time.
Thank you again, Congressman Barr. Are there any other questions? If not, I'm going to ask Todd if he would like to close us out. Again, just simply thanking you, Todd, and thanking the Congressman for spending time with us.
Thank you, Lester.
Well, Andy, thanks. I know, as Justin said, you came out early and had that Zoom meeting with us at El Bar, which was great. You're always there. And I think that's the thing we all need to remember. All of our fellow realtors, if we have an issue, the good thing about Andy is, even though he's not, they may not be in the 6th district, he will listen, as I think is the case with all of our delegations. So we just need to remember that. Also, don't forget, Andy, we can support him if you are a President Circle member. But Andy, I know you've got a lot on your plate. I know from the hospitality standpoint, I appreciate everything you're doing, because there's going to be a whole lot of sectors that's going to affect us as realtors down the pike. But we appreciate your work, and thank you for taking the time today.
Thank you, Todd. Thanks, Steve and Richard. Thanks, everybody. We really appreciate it.
Take care, Congressman.